Hello dear traders. Last week was rather turbulent for the US stock market. There were many bearish factors that pushed the stocks down. The Fed hinted about sharper, more frequent interest rate increases. At the same time, the US and Russia were unable to find a diplomatic solution to resolve a crisis over Ukraine. On February 22nd, Russia recognized the independence of the so-called Donetsk People's Republic and the Lugansk People's Republic. Vladimir Putin ordered Russia's military to maintain peace in two separatist regions of Ukraine. Watch our recap of the stock market trading and feel free to leave your feedback. The US stock market did not collapse following the news that Putin sent military forces to the so-called independent regions. Nevertheless, market fears over further development of events did not subside. The conflict is far from being over, given the monetary policy tightening by the Fed and soaring inflation worldwide. Analysts advise investors to brace for hard times. In the short term, the US market is projected to remain stable without any sharp trend changes. Wall Street has been dropping for the whole week. Speculators hectically got rid of risky assets, refocusing on safe haven ones. The Dow Jones nosedived by 760 points or 2%. Some analysts believe that the military conflict that scared off investors last week actually took place. The Kremlin did send troops into the territories for peacekeeping. Therefore, geopolitical tensions are likely to ease in the short term, allowing the stock market to recover. This is why the Dow may start a correction and perform an upward reversal. The index is also projected to stay in the range of 33,800 to 34,600 points. The S&P 500 may also revive, rising above 4,450. Last week, the index lost 100 points or 2.5%. Traders sighed with relief after the bloc and the United States did not impose tough sanctions against Russia for recognizing the DPR LPR as independent regions. In fact, there will hardly be any sanctions. This factor may somehow influence long-term prospects. As for short-term prospects, this is certainly bullish. In the second half of the week, the US will unveil fresh inflation data. The report may show an increase in consumer prices to 7.5%. Investors are now pricing in a rate hike by 0.5% in March. The Nasdaq showed a similar dynamic. Like other indices, it saw the worst February on record. Its weekly drop totaled 490 points or 3.5%. The index is unlikely to extend losses. Market participants have already factored in Russia's recognition of two eastern Ukrainian regions. This is why the index may soon start recovering, provided that there are no bearish factors. It's impossible to predict how things will unfold when it comes to geopolitics. Nasdaq is expected to move in the range of 13,300 to 14,000 during this week. Traders are anticipating the speeches of Fed policymakers Raphael Bostic and Loretta Mester. They may give more clues about the upcoming rate increase. Despite hawkish statements, the central bank prefers to stick to a flexible approach to monetary policy. Swap markets are now pricing in a 50 basis point increase in March instead of 25 basis points. Such news is positive for the stock market and its further recovery. Keep close tabs on financial markets on InstaForex TV channel. Feel free to leave your comments down below. Your feedback is important to us, and see you back soon.